we are doing the chapter futures in the derivative segment. Please stop talking. In which we are discussing arbitrage using the futures market. 2 more sums we have to complete in this arbitrage, or 3 more sums, 22, 23 and then 24. We'll complete those 3 sums and then move on to the last segment, that is hedging through futures. Not very difficult, very simple issues only. We'll be completing the hedging through futures in today's class. If you have time, stop talking, please. It will be audible if you stop talking. Stop talking. Now you able to hear me or not? Yes or no? No. See. So we'll be completing the hedging through futures in the today's class. If we have time, we can start with the next chapter, interest rate risk management. Currency futures is pending. I'll give the solutions and then discuss, rather than once again doing the problems, which is going to be very much similar to futures only. So in a subsequent class, I'll give you the solution to the currency futures, and then in 1 hour or so we can complete our discussion, so that no great time can be spent in those discussion except for 1 or 2 points that needs to be understood. So once we complete the chapter futures today, we'll start with the next chapter, interest rate risk management. 3 chapters, we'll do it together, interest rate risk management, interest rate swaps and then currency swaps, which we'll try to complete before the next Sunday, so that we'll be left with mergers, mutual funds, or the 2 more chapters on equity valuation. All those chapters are straightforward, simple chapters only, which can be completed in the last segment or in the last 10 days. Okay, Greeks alone, it is not possible to complete within the 31st March, because this itself is having so much time to be spent. We'll be doing the Greeks in the first week of the April. Okay, since it is having now we have been discussing about the futures arbitrage. From there I will continue. What we do is, we calculate first the fair futures price. What is fair futures price? Spot price compounded to future, and if we have any convenience yield, that should also be reduced while calculating it. We calculate the fair futures price and compare it with the actual futures price. If both are same, then future is perfectly priced. There is no arbitrage opportunity. If the fair future price is more or less, then the arbitrage opportunity exists. So this is what we call as a cash futures arbitrage. Everybody following on? Or cash carry arbitrage, they call it. So in this case, if the future is overpriced, you go for futures sell and then spot purchase. If the future is underpriced, you go for the futures buy and then spot sell. That means what? Short sell in spot market. That is why we have to go for the futures arbitrage. We did 2 problems. One for a Omega stock, where we did not have a dividend in the futures period. Second problem where we had a dividend. We also saw how the arbitrage profit can be booked when the settlement is made through delivery, and how it can be booked when it is going to be a cash settlement. Obviously both gave us the same answer. Everybody, are you having the continuity or not? No. Before that, lot of issues have been discussed in futures. We saw what is cash market, what is futures market, what are the long portion, short portion means, how the settlement is made, the concept of margin account, initial margin, maintenance margin, variation margin, exit before the maturity date, how it can happen. Then we also discuss about how the margin amount has been fixed. Then we saw the open interest calculations. Then we saw mark to market procedure. Then the concept of Kantong and then backwardation in the futures market, concept of basis, Then how fair future price is equal to spot price plus cost to carry minus convenience yield. How to find out implied convenience yield. All these issues has been discussed prior to the arbitrage, and then we started doing the arbitrage area. I don't want to summarize all this once again. Can we proceed further or not? Now, next. Now, let us take question number 22. Take question number 22. 22, 23, 24. These sum has to be done. 24 is called as no arbitrage boundary. Little bit interesting. All these three will try to complete before 11:15. Can I start or not? Now, please. Shh. What is page 106? Shall I proceed? What is the riskless profit that can be earned over 2 months if Nifty spot is 1000 and the 2 months futures is trading at 1010 and the risk-free interest rate is 12% per annum? Old problem, because now Nifty is around 5,500 to 6,000. In that range it is being traded. Okay. So, this is the old sum. Take the number as it is for the problem solving only. Can I proceed? Now, what is spot Nifty? 1000. And the Nifty futures is trading at how much? 1010. 1000 is the price today. 1010 is what? Today's price for a transaction to take place after 2 months. What is the interest rate given? 12%. Now they say, is there any arbitrage opportunity? If yes or no, how to make use of it is a question. Everybody can start doing it together or not? Now, tell me what all the steps we followed. First we find out what? Fair futures price, and then compare with the actual futures price, and then decide on the arbitrage strategy to find out the arbitrage profit. Am I right or not? Now, can I start doing it together? Right on first. Tell me the question number. Question number 22. Let's do it together. Question number 22. Okay. Step 1 is fair futures price. Step 1, fair futures price. Fair futures price is equal to, exam write the full name, don't write abbreviation. Fair futures price is equal to what? Spot price into e power TR. Spot price into e power TR. What is the spot Nifty in the market? 1000 into e power. How many months futures? 2 months futures into e power 2 by 12 into what the interest rate? How much percent? 12%. E by 2 by 12 into 0.12, which is equal to 1000 into e power 0.02. Very not 1000 into e power 0.02, which is equal to 1000 into 1.0202, 1.0202, which is equal to 1020.20. Fair future price is 1020.20, 1020.20. Everybody understanding it now? Step number 2. Identification of arbitrage. Step number 2, identification of arbitrage. Identification of arbitrage. Okay. Fair futures price is equal to, write along with me, fair futures price is equal to how much rupees? 1020.20. Fair future price is 1020.20. Next is actual futures price is equal to how much? 1010. Actual future price is 1010. Now you should tell me, is the futures market actual price underpriced or overpriced? Underpriced or overpriced? Underpriced. Something is underpriced, you will sell it or buy it? Buy it. So I should go for buy futures. That means tomorrow I am going to buy. Today what I should do? Sell short. That is a spot sell. I have to short sell. That's the meaning. Everybody is on no. Now, so the strategy is sell the short, that is short sell today and then buy futures tomorrow. Everybody, are you following us? Now, see. In this, let us have a small discussion and then proceed further. Listen here. Now, suppose this is a TCS futures. Forget about Nifty. This is what a TCS futures. In that case, the strategy is what? Futures buy. Buy the TCS shares in the futures market. Yes or no? And sell the TCS shares what? Today. Short sell the share today and buy the share in what market? Futures market after 2 months. Yes or no? No. My question is, can I short sell the TCS share today? Yes. It is possible to go for a broker and then what? Short sell the share today. TCS share can be purchased today or what? Sold today because it is a security. Yes or no? And the futures market, I can buy or sell, not an issue that is already known to us. Can I music? Now, tell me. The underlying asset here is a TCS share or an Infosys share or a Nifty. It is not a security, it is a point. It is what? An index point. Now, I can buy index futures. I can buy what? Index futures. Nifty futures can be bought. Can it be bought or not? Yes. No problem because I need not have delivery. Anything will be closed in futures market through what? Cash settlement by giving a counter buy or sell. Yes or no? Now, is it possible to buy a Nifty futures? Yes. Because on the last day, I am not going to pay money, take delivery of what? Nifty. They are going to give me a counter sell, book profit or loss. Yes or no? Now, is it possible to sell Nifty futures? Yes. No problem because I need not deliver. It is only going to be given a counter buy or sell. So, Nifty can be bought and sold in futures market because Nifty need not be delivered. Yes or not? But if the Nifty is to be delivered, not possible. Why not possible? Because Nifty is not a share which I can transfer in Demat account. Nifty is not a gold which can deliver to you physically. Yes or no? Nifty is what? Just an index point which cannot be delivered. Yes or no? Can I deliver a Sensex? There is only a point moving up and down that captures a market change. Are you following what I am saying? In that case, now look at our strategy. The strategy is what? Short sell Nifty and then what? Buy Nifty futures. I don't have any problem in buying Nifty futures because Nifty futures can be bought because there is no need for delivery done only through cash settlement. Yes or no? But my another strategy is in the cash market. Now, what is the cash market? Today, they ask me to what? Sell Nifty. They ask me to what? Sell Nifty. Now, I sell you Nifty and you pay me what? Some points. What is the spot price here? 1000. You pay me 1000 rupees. I sell you Nifty. Okay. Can I give Nifty to you? Is it possible or not possible? Why it is not possible? Because if I sell you a TCS share, I can deliver you the TCS share. Get a If I sell you an Axis Bank share, I can deliver what? An Axis Bank share. If I sell you MTH cash share, I can deliver what? MTH cash share. But when I sell you Nifty, where can I go for Nifty for you to deliver it? Yeah, are you following what I am saying? In the clarity regard. In that case, my question is, then is this strategy practical or not practical? Can it be implemented or cannot be implemented? So it cannot be implemented because we cannot deliver what? The Nifty futures. We cannot sell in the cash market Nifty because in the cash market when I sell Nifty, I have to give Nifty to you. Yes or no? I cannot give the Nifty to you. So we say that the strategy is what? Impractical. Yes or no? There's nothing called as impractical in the financial market. Everything is what? Possible. I can deliver you what? Nifty. How it is? It is done through index funds. It is done through what funds here? Index funds. Okay. Now, again, index fund is a great concept, new concept for which only the recent Nobel for economics has been what given. It is only for the research about what? The index funds and how it is used in the markets, mainly the futures and option market. These index funds are very greatly used and became a very highly effective hedging tool. Are you following what I am saying? Now, very simple. What happens is, Nifty is nothing but a portfolio of shares. Nifty is nothing but what? Portfolio of shares. 50 company shares, they put it into a portfolio and call it as what? Nifty. Yes or no? Now, inside Nifty, there will be TCS shares. There will be Infosys shares or not? Yes. There is going to be Reliance. There is going to be what? Axis Bank. There is going to be SBI. Yes or no? So, there can be what? Pharma, Rand Baxi. So many top, say, sectoral shares are going to be there in what? Nifty. Exchange only finds out the share to be selected. They once very frequently what? Review also the composition of the companies inside the Nifty and their portfolio. But understand that it is a portfolio 50 companies share in some proportion. Yes or no? Yes, sir. Very simple. If I want to buy Nifty, I cannot buy the index point. What I can do is, I can go to the share market and buy all the 50 company shares in the proportion how it is there inside the Nifty. BSAF share 5% is or not? Like that. Inside the Nifty, what is Nifty? The entire market value of the 50 company shares in some proportion. Everybody is or no? Now, what you can do is, if you go to the share market, buy SBI share, buy what? Axis Bank share, buy Infosys share, buy what? The share of TCS, like that. If or buy shares of Reliance, the top 50 companies whose shares are there in Nifty in some proportion, in the same proportion, when I invest in all those shares, I am holding a portfolio which is similar to Nifty. Yes or no? Yes, yes or no? If I want to sell Nifty, what will do? I'll sell all those shares in the same proportion. I'm having a portfolio with having what? A short portion similar to Nifty. Everybody follow what I'm saying? But it is not possible for individual investors. Remember, because top 50 company shares with the large sizes we have, if you are made to invest, it will be running into crores of rupees. Are you following what I am saying? I don't say buying all their shares to make a decent investment for some portfolio. It may require what? Lot of money to be invested. It is not possible for each individual investor to invest in 50 company shares. Everybody follow what I am saying? That to the top 50 companies. For that only, there are mutual funds. There are what? Mutual funds which collects money from us and invest on our basis. On our behalf, somebody says, you all give me the money. Okay, what I will do is, I'll invest on your behalf. I'll what? Invest on your behalf. And for the money given, I'll give you units. I'll give you what? Units. So, mutual funds we'll discuss later. Mutual fund is an entity which is an investment tool. It's what? An investment vehicle where we all, suppose we all together form a mutual fund. I am the fund manager. For example, okay, you can believe me, I am a fund manager. All your money I take it and then what? Invest. I'm just what? Investing. And for the money given, company allot shares or not. Let the allot you want something called as units. Very simple to share only. And based on my investment price movement, the units price also what? Moves up and down. Everybody, are you following what I am saying? This is a simple way of understanding a mutual fund. That mutual fund which invests all the money in the same proportion as the index is called as index fund. It's called as what? The index fund. The index fund will not invest in MTH cash share. Why do not invest in MTH cash share? It is not inside what? The stock index. In the parallel for what I'm saying. The index fund will not invest a full money in Infosys. Why? Because it will invest only in what? The same proportion how the index is there. Everybody following us. Daily the index constitution changes due to the increase or decrease of particular company shares. Yes or no? So daily they will be keep on what? Changing the composition by buying and selling shares inside the index. Such a fund will be called as what? Index fund. If you are a unit holder in an index fund, you have purchased the index or sold the index. Are you following what I'm saying? You buy an index fund units. You buy what? An index fund units. You are buying an index. Are you following what I'm saying? If you sell an index fund units, you are selling an index. So we can purchase stock index and also what? Sell stock index by becoming what? A unit holder or selling a unit in the index fund. Everybody following us? Should I repeat? Can I proceed? Should I repeat? Can I proceed? Okay. Last time. Very simple. Yeah? Now, somebody asked to repeat the question. Okay, one last time, yeah, for my satisfaction. See, if I want to buy a Nifty, don't think Nifty is something that jumps from heaven. Yeah? It is also a portfolio. It is also what? Portfolio. The portfolio measured as a point, that's all. Everybody has on now. Buying a Nifty is as good as what? Investing in the portfolio that is constituting the Nifty. It's on no. Selling a Nifty is what? Is like selling a market portfolio. I can buy a market portfolio, sell a market portfolio, but for a small individual investor, they cannot buy all the top 50 company shares or what? Sell it. They will not have a net worth to do it. Everybody follow what I am saying? In that case, We all small investors can together form a mutual fund, yes or no? Or a mutual fund together can collect money from what? All the investors, and those money, the fund does not invest in any other company. They invest only in what? The companies inside the Nifty. Okay. In what proportion? Same proportion. How the companies are there inside the Nifty index, same proportion will be investing. What proportion is there? You can easily understand. The website of stock exchange always publishes what? The composition of the Nifty. Everybody follow what I am saying? In that case, in the same proportion one can invest. Now, what happens is there is an index fund. And if I buy the units of an index fund, the index fund puts the money in what? The Nifty only. If I buy the units of index fund, I mean what? I am investing in a Nifty. If I sell the index fund units, it means what? I am selling a Nifty. Respond, yes or no? Now, come back to this question. What is my strategy? What is my strategy? Tell me. Short sell Nifty and buy what? Nifty futures. Come back. Why I go for buying the Nifty futures? Because the future price is underpriced. So since the future is underpriced, I go and buy what? Nifty futures. I buy Nifty in futures market. Spot, what I should do? Sell Nifty. Can I sell Nifty or not? Yes. I can sell what? Units of a Nifty index fund. It is as good as what? Selling Nifty. The price movement will be same and will be captured exactly. Or you'll follow what I am saying. So now, is it possible to buy and sell index? Yes, it is possible through what fund? Index fund. It's possible through what fund here? Index fund. So anything can be bought and sold in this world except what? Father and mother. No, everything is what? Saleable and... Can I proceed? Now, write down. The futures is, the Nifty futures is underpriced. The Nifty futures is underpriced. Hence, we should buy Nifty futures. The Nifty futures is underpriced. Hence, we should buy Nifty futures. Hence, we should buy Nifty futures. We should buy Nifty futures. Next. Therefore, in the cash market, we should what? Short sell Nifty. In the cash market, we should short sell Nifty. In the cash market, we should short sell Nifty. In the cash market, we should short sell Nifty. Everybody understanding it or not? Now, I'll later give the note. How can we short sell the Nifty? Let us complete the problem. Can I proceed? Now, step 3 is what? Arbitrage profit. Everybody, let's do it together. Step 3, arbitrage profit. Step 3, arbitrage profit. Now, let's do it together, please. Tell me, point number 1. What is my strategy today? Short sell what? Nifty at what is spot Nifty? Tell me how much rupees here? 1,000 rupees. 1,000 na? Short sell Nifty at 1,000. And next is what? Buy. What should I buy? Nifty futures. Short sell Nifty at 1,000 and buy Nifty futures at what the futures price? 1,010. And buy Nifty futures at 1,010. Now, next. I short sell Nifty for how much rupees? 1,000 rupees. This is going to be inflow, outflow, or inflow. What I should do? Deposit. Write down. Deposit rupees 1,000. Deposit rupees 1,000 at. Tell me at what percentage should I deposit? 12% for how many months? 2 months. At 12% for 2 months. I hope are you all following or not? Now, next. Point 3. What I should do? Realize deposit. Or maturity value of deposit. Both are same. Realize deposit. Will the bank give me back 1,000 or more than that? More than that. It is going to compound at 12% for 2 months. Tell me the calculation. 1,000 into e power 0.12 into 2 by 12. E power 0.12 into 2 by 12, which is equal to 1000 into e power 0.02, which is found as 1020.20. 1020.20. Everybody, yes or no? No. I have short sold Nifty or not? I have to buy back and close my short position. Everybody, yes or no? No. I should buy back what? Nifty. Now, I'll buy Nifty by exercising my futures contract or not? Write down. Next, point number 4. Buy Nifty. Buy Nifty at futures price of, buy Nifty at futures price of, what is the agreed price? 1010. At futures price of 1010 and close. And close what position? Short position. And close short position. Buy Nifty at futures price of 1010 and close short position. Everybody, are you following or not? Now, last point. Point number 4 of 5. Point number 5. Profit is equal to, what is the money in hand? 1020.20. What the amount I spent to buy it? 1010. What the profit here? 10.20. The profit is 10.20. The profit is 10.20. My question is, here I am assuming that what? In the futures market, I am paying how much rupees? 1010 rupees, taking delivery of the Nifty and then closing my short position. My question is, in futures market, will there be delivery a cash settlement? Cash settlement. Index futures is always settled through what? Cash only. So can we alternatively answer using the cash settlement or not? Now, I'll take two prices here. Nifty is trading at 1005 on the maturity date, or Nifty is trading at what? At 1025 on maturity. Two numbers can I take or not? Two numbers which came to my mouth, I use. Can I pass or not? Now, write down. Next, note. Write down. Note. Write down. Note. In the above solution, it was assumed that, in the above solution, it was assumed that the futures contract is settled. In the above solution, it was assumed that the futures contract is settled. It was assumed that the futures contract is settled through what? Delivery. It is assumed that the futures contract is settled through delivery. But index futures are always, no doubt, okay, but index futures are always what? Cash settled. But index futures are always cash settled. Index futures are always cash settled. Full stop. Everybody following up? Now, point number 1 or 2? 2. Let us take two situations. Let us take two situations. A, the futures closed at, the futures closed at 1025. Futures closed at 1025. B, at 1005. At 1005. Two numbers say to any number you can close it. Yes or no? 1025 and then what? 1005. Number, can I proceed now? Now. This we did in the last class also. We continue to do today also. Now. Situation A vapa. Situation A. Price. It closed at what? 1025. 1025. Answer my question. I am now in how many markets? Two markets. One is what? Cash market. Another is what? Futures market. Cash market and then futures market. Can I proceed up? Now, cash market today I took a buy position, a sell position, a sell position. I sold what? I sold what? Nifty fund. I sold what? A Nifty index fund. Okay. I sold the units of what? An index fund. Okay. Sold index fund for how much rupees? 1020.20 because I sold the index fund units for how much rupees? 1020. One. How much I sold for? I sold for 1000. Yes or no? 1000 I sold. I earned also what? 20 rupees deposit interest on that. The money realization by selling the index fund is how much here? 1020.20. In the real falling or not? Now can I proceed? Now. Next is in futures market. I went for a Nifty futures buy a sell a buy. I went for a buy Nifty futures at what price? 1010. At 1010. Now, tell me, after 2 months, the index fund units, how the share is having a price, mutual fund units always having a price. So, no, the index fund units, the Nifty index fund units are trading at a price how much rupees here? 1025. So, what I will do, I have to buy. Because I have to buy and close the short sell portion. I buy the units. What units? Units of index fund. By paying how much rupees? 1025. I buy by paying 1025. Now tell me, I sold the index fund today for how much rupees? 1020. I purchased back the index mutual fund at how much rupees? 1025. I have a profit or loss or loss. What the loss here? How many days? 4.80 is a loss I made in the cash market by selling and buying the units of an index fund. Yes or no? By selling and buying the units of index fund, the loss made is what? 4.80. Now, Nifty futures, buy is close to what? Sell futures. On the last day, the Nifty is same as what? Futures. The reason is what? Convergence. Now, how much amount here? 1025. Now, I bought a 1010, counters at what? 1025. Tell me profit or loss? Profit. What is the profit here? What is the profit? The profit is 15. Now, if I knock it off, I get 15 minus 4 point. What's the net loss here? 10 point. This is the profit. What is the profit? 10.20. Look at the yearly solution. What is the profit you booked here? 10.20. That is how one can be booking the profit. Everybody having the full clarity above? Now, next step. Situation B. I hope you're all doing along with me or not? Now, situation B. Okay. In situation B, the index fund closed at a price of how much here? 1005. Closed at a price of 1005. I am now in how many markets? 2 markets. One is what? Cash market, and second is futures market. Cash market and futures market. Cash market today, I sold index, purchase index, sold index. How can I sell an index? By selling the units of an index fund. I have a sell position by getting how much rupees? 1020.20. I sold the index for 1000 rupees only, but 20 rupees I got from what? Deposit interest out of that index proceeds. Okay, now 1020.20. Same day I took a buy what position? Buy position in futures market for how much price? 1010. On the maturity date, the index fund units dropped to what? 1005. I gave a counter buy at how much rupees? 1005. Now, I short sold the units at 1020. I bought back the units at what? 1005. I am making a profit or loss or profit. What is the profit here? 15.20 is a profit. Yes or no? No. The buy portion in futures market, the exchange gives me what? Counter sell at the futures price of 1005. Tell me I am having a profit or loss? Loss. What is the loss here? 5. Now, knock it off. Tell me what is the net profit here? 10.20 is the net profit I make. That is how we can make an arbitrage profit, whether the price increases or what? The price decreases. Everybody respond. Are you having the clarity or not? Now, sollupa, yes or no? No. Write down notes. Write down notes. Point number 1. Notes. Point number 1. It is possible to trade in index futures. It is possible to trade in index futures because it is possible to trade in index futures because the futures market doesn't require. It is possible to trade in index futures because the futures market doesn't require. The futures market doesn't require what? Delivery. The futures market doesn't require delivery. The futures market doesn't require delivery. Everybody, are you understanding it or not? Now, point number 2. Is it possible to trade? Is it possible to trade index in spot market? Is it possible to trade index in spot market? Is it possible to trade index in spot market? Question mark. If we spot sell Nifty, continue writing. If we spot sell Nifty, how can we deliver the Nifty? If we spot sell the Nifty, how can we deliver Nifty? How can we deliver Nifty? Question mark. If we spot buy Nifty, if we spot buy Nifty, I buy at spot Nifty, okay? If we spot buy Nifty, how can we take delivery? How can we take delivery of Nifty? How can we take delivery of Nifty? How can we take delivery of Nifty? Question mark. Nifty is just what? Points. Nifty is just points which cannot be delivered. Nifty is just points which cannot be delivered. Nifty is just points which cannot be delivered. Everybody, are you understanding my doubts or not? Doubts we put as what? Question. What the question here? Can we trade Nifty in spot market? If I spot buy, how can I take delivery? If I spot sell, how can I give what? Delivery. Nifty is only what? Points. It cannot be delivered. Is that question? Did you understand the question or not? Now, write down point number 2 or 3. 3. Point number 3. Nifty represents. Tell me, Nifty represents what? Market portfolio. Nifty represents market portfolio. Nifty represents market portfolio. Full stop. It consists of shares of 50 selected companies. It consists of shares of 50 selected companies. It consists of shares of 50 selected companies in a given proportion. It consists of shares of 50 selected companies in a given proportion. In a given proportion. Can I proceed or not? Next, continue. If we invest in all those shares, if we invest in all those shares in that proportion, if we invest in all those shares in that proportion, if we invest in all those shares in that proportion, we are said to be buying Nifty. If we are investing in all those shares in the said proportion, we are said to be buying Nifty. Now, we are said to be buying Nifty. And if we sell all those shares in the given proportion, and if we sell all those shares in the given proportion, if we sell all those shares in the given proportion, we are said to be selling. We are said to be selling what? Nifty. We are said to be selling Nifty. We are said to be selling Nifty. Hence, Nifty can be bought and sold. Hence, Nifty can be bought and sold by buying and selling Nifty portfolio. Hence, Nifty can be bought and sold by buying and selling Nifty portfolio. Nifty can be bought and sold by buying and selling Nifty portfolio. By buying and selling Nifty portfolio. Did you understand the logic or not? Now, next, last point. Point number 4. Is it possible to invest? Is it possible to invest in portfolio of? Is it possible to invest in portfolio of the top 50 companies? Is it possible to invest in portfolio of the top 50 companies? Is it possible to invest in portfolio of the top 50 companies? Question mark. It involves what? Huge net worth. It involves huge net worth. It involves huge net worth. Question mark. No, are you following not? No. Right answer. Index funds collects money from investors. Index funds collect money from investors and invest it in. Index fund collect money from investors and invest it in. And invest in what? Index portfolio. Index fund collects money from investors and invest it in. Invest it in what? Index portfolio. And invest in index portfolio. For the money collected, it allots. For the money collected, it allots. For money collected, allot what? Units. For money collected, it allots units. For money collected, it allots units. It allots units. Full stop. Everybody yes or no? Write down. When we purchase units of index funds, when we purchase units of index funds, when we purchase units of index funds, we are purchasing an index portfolio. We are purchasing an index portfolio. And when we sell units, we are selling index portfolio. And when we sell units, we are selling index portfolio. When we are selling units, we sell index portfolio. Everybody, are you following or not? Now, see the logic of discussion here. The discussion started. Can Nifty be purchased or sold? In the question, yes or no? I said, yes. We purchase a portfolio of the shares inside Nifty. We are purchasing Nifty. If we sell your what? Selling Nifty. Counter question, 50 company shares, how can I buy? It is what? Too costly. I don't have a network. No problem. There are funds which invest in what? Index portfolio. When you buy the index units, you are as good as buying what? Index portfolio. When you sell the index units, it is as good as what? Selling the index portfolio. Is the answer. Respond yes or no. Now, final conclusion. When I want to buy Nifty, what I will do? I buy index fund units. Remember, when I sell Nifty, what I should do? Sell index fund unit. It is as good as what? Buying and selling an index. Everybody, are you following? Right now, last point. Point number 5. To conclude, when you purchase and sell index fund units, when we purchase and sell index fund units, we are purchasing and selling index fund units. We are purchasing and selling index. When we purchase and sell index fund units, we are purchasing and selling index. When we purchase and sell index fund units, we are purchasing and selling index. Everybody, are you understanding or not? Now, with this, we have completed this particular problem. Now, understand that every problem answer is very small only. But to convince you how the answer really works and how it can really operate, it only takes what? Lot of time. Now, I could have done this sum in 5 minutes. No problem. Yeah. Again, I say, listen to the issue. If I done in 5 minutes, all of will be having a doubt. Sir, how can I buy and sell what? Nifty. You only said as what? Index point. The confusion will be still arising. Yes or no? Now, for that only the background discussion is always made. Can I proceed or not? Now, With this, we have completed question number 20, question number 22. Now, please take question number 23. It's a small problem. Let's do it together. Commodity futures arbitrage. Okay, take question number 23. Spot gold 30,000 rupees per 10 grams. Cost of financing 8% per annum. Calculate the no arbitrage futures price. If the actual future price is 31,800, number 1, 31,000, number 2, explain the arbitrage opportunity. I think how many months futures not given here? It is 6 months. It is how many months futures here? 6 months futures. That's a mistaken question, not given. How many months futures? 6 months futures. Okay, now, can you start or not? Now, see, the question is, you have been asked to find out the no arbitrage futures price. Tell me another name for no arbitrage future price. Fair futures price. At fair future price, you don't have any arbitrage. Actual price is more or less, you'll be able to make what? Arbitrage profit out of it. So can we quickly complete this question number 23 or not? Now, I will do for one situation and you can just have it as homework for what? Other situation. Can we start or not? Now, first. Please. Question number 23. Stop talking. Step 1. Fair futures price. Step 1. Fair futures price. Fair futures price is equal to spot price plus cost to carry. Fair futures price is equal to what? Spot price plus cost to carry. I generally use this type of equation for commodity futures, where I rarely avoid doing the continuous compounding unless the question requires. Now, spot price plus cost to carry, nothing wrong even if you write what? Spot price into e power TR is also what? Fair future price only. I don't deny that. Everybody following on what I'm saying? Now, next, spot price. What is the spot price of gold? 30,000. Spot price is 30,000. Cost to carry. I carry the 30,000 rupees gold at what percent interest? Question like, how much here? 8% interest. For how many months here? 6 months. 30,000 into 8% into 6 by 12. Tell me the number here. 1,200. 1,200. Now, fair futures price is equal to 31,200. Fair futures price is equal to 31,200. Fair futures price is equal to 31,200. To avoid confusion, don't shout at me alternatively. You're going to want alternatively because all formulas are same only. All formulas are what? Same only. Presentation different, that's all. Yes or no? Now, alternatively, fair futures price is equal to spot price into 1 plus R power n. Spot price into 1 plus R power n. Futures price is equal to what? Spot price compounded na? Spot price into 1 plus R power n. What is spot price? 30,000. 8% interest is for what? 1 year. What is for 6 months? Yeah, 4%. 1.04 power. I just invest for 1 period na? 6 months power 1. Tell me what is the number? 31,200. Rumba simple. In this 31,200, 30,000 is what? Spot price. And 1,200 is what? Cost to carry. That's the meaning. Respond yes or no. Somebody says, no. I want to do a continuous compounding. Do it. They are not an issue. 30,000 into what? E power TR. And in that, the number will be more than what? 31,200 because the compounding is done what? Continuously. That's the only change. It's nothing but spot price plus the cost to carry. Everybody, are you comfortable or not? Now, next. Step 1 over. Can I pause or not? Now, step 2. Okay. Identification of arbitrage. Identification of arbitrage. Fair futures price we got as 31,200. Fair futures price 31,200. Actual futures price, there are two questions. I'll answer the first one. What is the actual futures price in the futures market? What the actual price being quoted today? 31,800. Can I give 31,000 as a homework or not? No. 31,800. Actual futures price 31,800. In the futures market, the gold future is trading at 31,800, but it should have been trading at what? 31,200. The futures market has overpriced the gold, underpriced or overpriced. Futures is overpriced. In the futures market, buy it or sell it or sell. I'm going to go for what? Sell gold futures. So today what I should do? Buy gold. In the price or no? Right now, next. Since the gold futures is overpriced, since the gold futures is overpriced, we should sell gold futures. We should sell gold futures and spot buy. And spot buy what? Gold. We should sell gold futures and spot buy gold. And spot buy gold. I ask you a question. I ask you to spot buy gold or not? Yes, now, suppose I go to a gold shop for buying, they'll be having some margin and selling, yes or no? Yes, or no? In that case, I don't want to hold gold. I want to spot buy gold. Is it possible? Yes, sir. How? By holding gold funds. There are funds which invest only in what? Gold, and they allot you what? Units. If you buy the units of a gold fund, exchange traded fund is a gold fund. If you buy the unit, as well as what? Buying gold. So today people are not buying what? Gold physically, always they're buying what? Units of a gold fund. If you buy a unit of gold fund, it is as good as what? Buying the gold. Yes or no? Now, suppose a person does not have money, 1,000 rupees only is having. With 1,000 rupees, can anybody buy gold today? Yes or no? Or sovereign around what? 24,000 or what? 25,000. With 1,000 rupees, a person cannot what? Buy a gold. Yes or no? Very simply, he can still what? Buy gold by buying units of what? A gold trade and mutual fund. Then later, he can convert the units into what? A gold on a later date. Everybody, are you following what I am saying? So, in today's world, commodity also is having what? Funds, trader. By buying the fund, we can just what? Buy what? The asset itself directly. Everybody following up? Now, next. Write down step number 2 or 3. 3. Step 3. Arbitrage profit. Step 3. Arbitrage profit. Arbitrage profit. Point number 1. What do you do here? Buy what? Gold spot at how much rupees? 30,000 rupees. Buy gold spot at 30,000 rupees at 30,000 rupees and what? Sell what? Gold futures at how much rupees given? 31,800. In the price at least trading in the futures market. Today itself go to the futures market, give what? A future sell at 31,800. Point number 1 over. Yes or no? My question is, to buy the gold at 30,000, if I 30,000, what do I do? Borrow rupees, how much? 30,000 at how much percent? 8% for 6 months. At 8% for 6 months. Point number 3. Then what I will do? Maturity value of borrowing is equal to 30,000 into 1.04. We can also base 31,200. We do E compounding. They can also do it what? E compounding become 30,200 and 36 or 40 as the case may be. Yes or no? Now it is 31,200. Next. How to repay borrowing? By selling gold. I have to repay borrowing by what? Selling gold. I sell gold using what? The agreed price of 31,800. Write down. Sell gold at futures price of sell gold at future price how much rupees? 31,800 and repay borrowing. Sell gold at futures price of 31,800 and repay borrowing. Everybody, yes or no? Now, point number 5, profit is equal to, I write in the top, profit is equal to what? 31,800 minus 31,200. Is equal to how much here? 600. Profit is equal to 600. In this case, what is I assume here? Delivery through settlement. Write down note. Point number 1. It is assumed that the delivery is made through settlement. It is assumed that the settlement is made through delivery. Okay, and assume that settlement is made through delivery. Let's assume that settlement is made through delivery. Point number 2. If it is cash settled, the profit is booked as under. If it is cash settled, the profit is booked as under. Everybody, can I start or not? Now, write down situation 1. Or situation A. Actual price of gold. Situation A. Actual price of gold after 6 months is. Actual price of gold after 6 months is 31,000. Actual price of gold after 6 months is 31,000. Is rupees 31,000. Can we proceed now? There's nothing to do with the second question. I'm just giving situations. Okay. Now, I'm in how many markets? 2 markets. One is what? Cash. Another is what? Futures. Cash and then futures. Cash market. Today what I did? I have purchased a gold for how much rupees? 31,200. I paid 30,000 agreed. 1,200 is what? The cost to carry. It cost me 31,200 to purchase and hold the gold. Yes or no? And in futures market, I took what portion? Sell futures portion for how much rupees? 31,800. Now, the gold closed at how much rupees there? 31,000. So what I'll do? I'll be buying the gold, selling the gold. How much rupees? 31,000. I'm going to have a loss of how much? 200. I sell the gold at 31,000, make a loss of 200 in the cash market. Who is the savior for me? Futures market. Sell futures is given what? Counter buy. The counter buy happens at what? 31,000. Tell me this 31,000 is cash price or futures price or both are same because of what? Convergence. I counter buy at how much? 31,000. Sorry, I just go give a counter buy at 31,000. Tell me profit or loss or profit. For the profit here, 800. The overall profit how much is 600. Overall profit is 600. Now, situation B. The gold closes at 32,000. The gold closes at 32,000. The gold closes at 32,000. Can I proceed? I am having my position in how many markets? 2 markets. Name them. Cash market and then futures market. Cash market, tell me, I am having a buy or sell position? Buy. I have purchased gold at how much rupees? 31,200. Inclusive of the cost to hold it. Futures, I have what? Sold gold futures, how much rupees? 31,800. The gold market closed at how much rupees? 32. Hence, I sold the gold which I am having for how much rupees? 32,000. What is the profit I made? 800. The profit I made is 800. Future sell is given a counter through what? Futures buy. On that day, the future price is same as what? Cash price. Due to convergence, was amount here? 32,000. Profit or loss? Loss. For the loss? 200. Overall, I made a profit of 600. I made a profit of 600. This is the arbitrage through the futures and cash market. Everybody, are you following or not? This arbitrage we call as what? Cash carry arbitrage. I have a cash market position, I carry it and then make an arbitrage through the futures market. We call as a cash carry arbitrage. Up to this, everybody, have the clarity or not? No. Next. See, last question in the arbitrage is question number 24. Little bit interesting. Let us have a background discussion, little bit lengthy, and then quickly complete that particular sum. Okay, now first let us read the problem and then I can just go for the introduction as well as the background discussion. Please. Spot price of gold 30,000, interest 6%, 10%. What is 6%? What is 10%? I can deposit at 6%, borrow at 10%. Transaction cost on buy or sell is 3%. That is brokerage to the broker. Define no arbitrage boundary for futures contract expiring in 1 year. Revert the no arbitrage boundary if on short sell the trader can receive a fraction amount of 80% from the broker. Also explain the meaning of the term quasi arbitrage. These are all the issues which needs to be discussed. Can we start or not? Now. We will come from known and then go to the unknown. Please. Fair futures price is equal to actual future price. Answer. Fair future price is equal to what? Actual future price. Arbitrage, no arbitrage. That means no arbitrage is a price. It should be what price? Fair future price. If the price is other than the no arbitrage price, I'll be having what? An arbitrage. Enna price or no? No. Two things can be there. Actual future price quoted may be more than the fair future price, or actual future price quoted can be what? Less than the fair future price. There can be two situations that can be in the futures market. Yes or no? No. We have done the arbitrage problems. Let us discuss it more formally for me to take you to the next formula. Can I proceed or not? Now, look at this. Now, there can be two situations. First situation is actual futures price is greater than fair future price. In the futures market, a particular futures is trading at 1,300 rupees. It is worth only what? 1,200. So the actual price in the futures market is more than what? The theoretically correct fair future price. One situation. Are you able to understand that? No. Situation 2 is actual futures price can be what? Less than fair futures price. I don't want you to be sleeping. I don't want you to be looking blank. I want you to put an effort, think and answer me. Okay. All are simple, but you should be thinking. That's all. Okay. Now tell me. Actual future price is more. Fair future price is what? Less. Tell me. In the futures market, the given asset is overpriced or underpriced? In the futures market, the asset is what? Overpriced. Suppose let's take an asset as gold. Let's take asset as what? Gold. The gold is what? Overpriced. In which market? Spot market, a futures market, a future market. Something is overpriced. What you'll do? Sell. What you'll do? I futures sell. In the futures market, I'm going to sell the gold. Yes or no? In a Sulabha? No. That means the strategy is what? Sell futures. I have to sell what? Futures. What do you do? Spot buy the asset. Spot buy the asset. Buy the gold today and sell what? The gold future is a strategy. Now, Come to the second case. Future price is actually less than what it should be. The futures market is underpricing the gold, overpricing, underpricing. Actually, buy the gold in futures market, sell the gold, buy the gold. Buy the gold in futures market means what? Short sell the gold today. So now, in that case, what should I do here? I am going to buy water in futures market. I am going to water. Sell means short sell at what? Yeah, spot market. This is the other strategy. So now, through these two strategies only, in all the previous four sums, we made a profit. That's all. Nothing has been discussed elaborately. Through these two strategies only, the profit has been obtained. So now, come to the strategy first. Okay. Now, I sell at spot. I sell at what? Spot. When I sell at spot, what I get is what? Spot price. S0 means what? Price today. I get what? Spot price. Inflow, outflow. Inflow. What I do is, I am going to deposit it. I am going to what? Deposit it. At CD means what? The cost of deposit. So no, I am going to deposit it. So cost to the borrower, and it is going to be what? Income. I see what? C is a carrying amount. C is what? A carrying amount. It happens to be an income for me. So no. Now, I sell the gold today at what? Spot price and deposit. This is a maturity value. So no, convenience, you'll not forget it. It's going to be what? Maturity value. Now, this is my income. From this, I reduce what? I reduce what? Yeah. Actual future. Because I'm going to buy it using what? Future. This is the profit I'm going to make. That's what we did in all the sums here. So no, very simple here. I sold the gold today. I got 30,000 rupees. I invested how much percent? 8%. If how much rupees here? 31,200 is my inflow. So no. Now, since I short sold, I have to close it by what? Buying it in futures market, cash settlement, etc. Leave it here. Anyhow, both are going to be same. So no. In that case, I pay how much to buy it? Actual futures price. The profit booked is what? Spot price into 1 plus cost of deposit minus what? Actual future price gives you the profit. Now, come to the left hand side. In the left hand side, tell me what I did. I spot buy and sold in what? Futures. When I sold in futures, after 6 months, I'll be getting what? Actual future price. This is the selling price I'm getting. Yes or no? I sell to gold using what? 31,800 rupees. No, I remember or not? No. In this, I buy gold what? Today for delivery. I buy at what price? Spot price. I buy it by borrowing what? Money. 1 plus what? The cost of lending. Cost of? Okay, CB. Cost of borrowing. Okay, cost of borrowing. Everybody, yes or no? Now, I invest 30,000 rupees by borrowing at how much percent? 8%. So how much I spend to buy is what? 31,200, which I sell using what? Futures price. This is a profit I book. Yes or no? Now, my question is, if the borrowing rate and lending rate, if the borrowing rate and deposit rate are same, if the both rates are what? Are same, in that case, this number and this number should be same. Yes or no? Both numbers should be what? Same. Now, so the profit I make is also going to be what? Same for the futures market. Now, if the actual future price is more, I make profit from this strategy. The actual future price is what? Less. I make profit from this strategy. If the AFP is equal to what? FFP, the profit is what? 0. So there is one price called as what? No arbitrage price. Any price below that, above that gives me arbitrage. No. In the clarity, now that is 31,200 rupees is SO into 1 plus CD. Yes or no? 31,200 is what? SO into 1 plus CB also. What I am saying? Because borrowing rate and renting rate are what? Same. In that case, the fair future price is one single price. Below which, if the actual future price is there, I can make the profit by what? Selling spot and buying in what? Futures. If it is above, I can make profit by what? Selling in futures and buying at spot. In that case, there is only one price called as what? Fair future price. Above this, below this, arbitrage exists. But this is called as perfect market. Called as what? Perfect market. Sharp, CABM, all assume only perfect market. Now, what they say is, when the market is imperfect, market is what? Imperfect. What happens? Question arises now. When the market is imperfect, number one, the borrowing rate and deposit rate differs. Deposit rate will be less than what? Borrowing rate, because other party makes a margin out of it. Yes or not? When the market is imperfect, when you buy the share at what? Spot, or when you sell the share at spot, the person who is doing it for me, the buying and selling, will charge some brokerage for me. Yes or no? I'm going to have a transaction cost later. Now, in an imperfect market, when a short sell, okay, always when a short sell, broker is at risk. Broker only borrows some other person share, delivers. Yeah, I short sell when the price increases, I run away without closing a short portion. What happens? The broker has to bear the brunt of it or not. So what normally brokers do is they give only fraction money. If I sold for you for 100 rupees, they give only what 80, return like a margin money 20 rupees, so that any loss if you escape, you have the 20 to make it up. Are you understand what I am saying? In that case, real market, short sell money will not be given to you fully. All money purchase and sold will be charging what? Brokerage. Will be having a different deposit rate and what? Lending rate. Respond yes or no? In such a case, I cannot say that this price and this price will be what? The same. Instead of a single no arbitrage price, that be what? A no arbitrage boundary. That be having what? No arbitrage boundary. Within that boundary, no arbitrage. Beyond that, arbitrage exists. Yes or no? Rumba simple. See, deposit rate, borrowing rate, same. Deposit borrowing rate what? Same. They don't charge any brokerage, no fraction amount, everything leave it there. In that case, this number and this number are same or not? Yes or no? That is why these two numbers are same. The two numbers I call as fair future price. I call as what? Fair future price. Yes or no? If the actual future price is less, then I can make a profit by selling today and buying in futures. If the actual future price is more than this common number, what I will do? I will buy it today and sell in what? Futures market. So the number no arbitrage is a single price, is a no arbitrage price, single price. Above this, below this, I have arbitrage. Below this, short sell, buy. Above this, what? Buy and futures sell. Are you following what I am saying? Now, what I say is, when this borrowing rate and when this deposit rate differs, then this and this number need not be same. That means below this number arbitrage exists, not this number, yes or no? And above this number arbitrage exists, yes or no? In that case, the arbitrage is not below and above one single number, it below and above what? Some two different numbers, yes or no? In that case, it is not an arbitrage price, it becomes what? An arbitrage boundary. There's a no arbitrage boundary. Below the lower bound, I'm having what? Arbitrage. Above the upper bound, I'm having what? Arbitrage. Within the boundaries, I don't have what? Arbitrage, because of market imperfection. Are you following what I'm saying? What the market imperfection? Borrowing rate, lending rate is not same. I have to incur spread towards the bank. Yes or no? They charge me brokerage for what? Buying and selling. Fraction amount only will be given. They won't give a full short sell amount. All this problem arises. Now, in that case, a question arises. Then, sir, what is that minimum price in the boundary? What is the maximum futures price in the boundary? Above that, I can make what? Arbitrage profit. Within that, the profit cannot be made. Is the next issue. That is what is this problem all about? Now, tell me, what makes arbitrage boundary created? Three factors. One is what? Deposit rate, lending rate, different. Transaction cost and what? Buying and selling underlying asset. Third is what? Fraction amount given on the short sell. All this makes it what? Difficult and different, creates an arbitrage boundary. And discussion come to this next stage. And I should have done otherwise here. Below, if the actual future price is what? Below, then I'll be making what? Arbitrage profit. Above means what? I'll be making the arbitrage profit. This is like minimum, this is like what? Maximum now. Now, see. Two things. First is minimum futures price. Next is what? Maximum futures price. Okay. Minimum futures price is F into SO into 1 minus T into 1 plus CD. Into what? 1 plus CD. Is the minimum futures price. Maximum futures price is SO into 1 plus T into 1 plus CB. Into what? 1 plus CB. F now fraction amount. S0 means what? Spot price. 1 minus T means 1 minus transaction cost. 1 plus CD means what? 1 plus cost of deposit. Maximum future price is SO means spot price. 1 plus T means what? 1 plus transaction cost. 1 plus CB means what? 1 plus cost of borrowing is a formula for minimum, maximum. Below minimum, above maximum, what I can do? I can make an arbitrage profit. Now, I'll explain the logic, very simple only. But let me put the current question number for you to understand the logic much more better. Just we can tell what the number alone. Now, look at the current question. Everybody, you should tell me. Don't sleep. All of you tell me. Now, 1 and 2 combine it. Okay. What is the fraction amount my broker is giving? How much percentage here? 80%. He gives how much percent? 80%. What is the spot price of gold? 30,000 into 1 minus what the brokerage here? 3%. Into 1 point. What the deposit on the rate of interest? 6%. 1.06. How many months set up? 1 year. It is given us what? 1 year. Okay. So it is 1.06. I want an answer. The answer is 80% into 30,000 into 97% into 1.06. You know the port what is the number? 1%. What is the number? 24,677. Number correct number? No. Come to the next stage. Okay. What is spot gold price? 30,000 into 1 plus 3%. 1 plus how much percent here? 3%. Brokerage into 1 point. What the interest rate? 10%. 10. What number solupa? 33,990. 33,990. In the futures market, stop talking. In the futures market, if the futures gold is trading between 24,677 and then what? 33,990, I cannot make any arbitrage from cash and futures market. Yes or no? Below that, above that, I can make what? Arbitrage. Is the meaning of this. I'll explain the logic later. Do you understand the meaning of this or not? Now, first of all, let us see the logic. Very simple, no rocket science. Now, listen here. First, please. This is a formula given. I have one more alternative. I'll discuss at the end, not to confuse you now itself. Now, see. First of all, now, I'll ask you, when the actual future price, for example, is say 20,000. How much means here? 20,000. Actual future price is under price or over price or under price. What you will do? Buy futures. What you will do? Sell at spot. Yes or no? Always, when the future price is low, I go for what? Selling at spot. When the future price is what? High, I go for what? Buying at spot, selling in future. Yes or no? In the now, below minimum, I like to what? Sell. Above max, I like to what? Buy. Now, see. If I sell, what happens? I get spot price. I get how much base? 30,000. My question is, this 30,000, will the broker give me the entire amount? No. He will retain only what? 20% and give me a fraction of 80%. Not? Now, that means what I get is how much? 24,000. No. That also, he will withhold brokerage and give you the balance. Current now, what the brokerage here? 3%. He will give you only what? 97% after withholding the brokerage. Yes or no? In that case, 30,000 into 97% is the money I should receive after the brokerage cost. On the receivable amount, he gives me only what? 80%, retaining 20% as what? Fraction money. Yes or no? Now, this money only I can deposit, and how much percentage? 6%. This will be maturing to what? The future value, and I cannot buy more than this in the futures market. Yes or no? That means the future price should not be more than what? 24,667 rupees. Ennappa purinjudha? No, are you following what I am saying? Now, please. Again I repeat. Now, how much is that? That is, suppose you are selling today, buying in futures. Agreed? You are selling today and what? Buying in futures. When you sell today, at what price you sell? 30,000. Brokerage gives you only what? 97% after taking 3% commission. Yes or no? Now, on this 97 also, he will not give the full money. Will retain what? 20%. Gives only fraction amount? 80%. This money you deposit, how much percent? 6%. How many years here? 1 year. At the end of 1 year, how much money will be hand in hand? 24,667 is the maximum amount I am willing to pay for the futures. Everybody, are you following on? Then this is going to be what? The minimum futures price. Below this, I'll be making what? Arbitrage profit. Ennappa sollupa. Yes or no? Come to the maximum. Now, in this case, I'll be selling in futures and buying at spot. Now, suppose the actual price is 34,000. Now what I will do? I buy at spot and sell in what? Futures. Romba simple, yeah? When I buy at spot, today how much should I invest? 30,000. I should not only invest 30,000, I should invest to also, I should not only borrow 30,000, also borrow to pay brokerage, yes or no? So the money I'm spending is 30,000 into what? 103% is the amount to be spent, yes or no? In that, I'm going to pay how much interest? 10%. So I invest 30,000. I also invest what? 3% on brokerage. This money how I got? By borrowing. I repay along with what? 10% interest. So the money I put in, which matures how much? 33,990. I should sell more than this amount to make a profit, yes or no? That means the maximum future price how much? 33,990. Beyond which I'll be making what? An arbitrage profit. This is the futures boundary. It's called what boundary? Futures boundary. Minimum and then what? Maximum price. Now, this is what is given in the books and all, like Hull, etc. Now, I have only a small change which I feel is genuine. I may be corrected. You write this in what? Examination question has been asked. But what I feel is, on the maturity date, I will not only get 24,667 because when I'm closing my short portion, he give me back the fraction amount. Now, because 20% is not the cost, it's only what? Withholding it. Only thing is, I will not get it today. I cannot earn interest on the 20%, but I will get the 20%. Yes or no? That means, in my view, I'll be getting what? 6,000 rupees more. Yes or no? That means it should be 30,667 to what? 33,990 can be a better answer. Are you following? Now, one way of understanding it is, people may say, sir, I'm a regular trader. I'm frequently doing what? Short selling and buying. My fraction amount is always blocked. Is always what? Blocked, like a working capital investment. It's like what? A working capital investment. So I will never recover it back till I close my business. Still, I don't know when I'm going to close my trading in futures and spot. I'm thinking it is going to be what? Last forever, and hence I am not taking as what? Inflow in the last man. Also can be one way of looking at it. Now, it all depends on the perception only, but this is a formula that is used for the no arbitrage boundary in most of the textbooks. Now, tell me, why a single no arbitrage price? Was there no? Fair future price is spot price into e power t. A single no arbitrage price is now not a single price, become what? Boundary. It is called as what? No arbitrage boundary. Now, if the futures price, forget about the fraction return back, the future price is between 24,667 and then what? 33,990. Can I make arbitrage profit? No. It's beyond that. Below this only, arbitrage profit is possible. Earlier, in a single price below that arbitrage by selling today and buying futures, above that arbitrage by what? Buying today and selling in futures. Now it is between two maximum minimum. Below minimum, sell spot, buy futures. Above maximum, buy spot, sell future, and be getting arbitrage profit. Respond, are you following what I am saying? Now, so it is between 24,677 to what? 33,990. As an investor, I cannot make any profit in the futures market. Yes or no? Now, see, in this case, my transaction cost is 3%. What is my brokerage? 3%. The deposit rate is 6%. Lending is what? 10%. And there's a fraction amount. Now, see, what happens is, market is comprising of small players and then big players. We are all like a small fish swimming in water, ocean. There are sharks, whales, all of them are there. Yes or no? So many hedge funds are there, mutual funds, institutional investors, high net individuals, so many persons here. We are like mosquito, they are like what? Eagles or what? In the market. No. For them, advantage is they can negotiate on brokerage. If the broker charge me 3%, they can do it in 0.25% because they have a volume to deal with it. Yes or no? Now, similarly, they may have a good credit rating with the bankers, everybody, they'll be able to raise money at what? A cheaper rate, which as an individual investor, I may not be able to do so. Yes or no? Short seller and all will not be worried in short selling with me because I have a big volume trading and the fraction amount may be less, may not be there at all. Yes or no? In that case, for them, the boundary becomes narrower. For me, 24 to 30, they'll be having what? 27 to 31 or 32. Everybody follows it. Now, for me, the boundary is no arbitrage is what? Big. For them, it is what? Small. In my no arbitrage boundary, they can make arbitrage. Yes or no? That is what we call as what? Quasi-arbitrage. Call as what arbitrage? Quasi-arbitrage. Where people don't take benefit from share prices or future prices. They take benefit from what? The negotiations like what? The imperfections like transaction, etc. That becomes what arbitrage? Quasi-arbitrage. Everybody following what I am saying? So this is what is the solution to this question. So what the question has been asked here? 3 questions. One is what? Define no arbitrage boundary expiring in 1 year without the fraction amount. Second is what? When fraction amount is 80%. Third is explain the concept of quasi-arbitrage. Is what has been discussed. Now, the solution to this answer will be writing as a notes now, not as a solution. In which, incidentally, this will be the calculation. Now. Right, question number 24. Take question number 24. Shall I proceed now? Write down. Question number 24. Give the heading. No arbitrage boundary. Give the heading. No arbitrage boundary. Please. Shh. Point number 1. Point number 1. Till now, we saw that fair futures price is equal to spot price into 1 plus C. Seeing the carry, okay, it can be a carrying cost or carrying benefit, whether I sell at spot or buy at spot. But fair future price is equal to what? Spot price into 1 plus C. Spot price into 1 plus C. Everybody understanding it or not? Now, next point number 2. Point number 2. There can be 2 situations. You write it opposite, okay? Branch it into 2. First branch, actual futures price less than fair futures price. I see the first left and then go for the right, okay? So I just wrote oppositely in the sheet. First write this particular part. Actual future price less than fair future price. What is second situation? Actual futures price greater than fair future price. Actual futures price greater than fair futures price. Can I proceed on? Go to the first branch and say, now, since actual future price is less, what I'll do? Buy futures and sell spot. The strategy is buy futures and sell spot. Buy futures and sell spot. Second branch, please go to second branch. What I'll do? Sell futures. Did you understand right or not? Future overpriced na? Sell futures and spot buy. On spot buy. Go to the first branch. Profit is equal to, first branch, profit is equal to, all of you tell me, I sell at spot or not? What the inflow? S0 into, what I do with the amount I receive here? Put in pocket or deposit into 1 plus C. S0 into 1 plus C. S0 is equal to S0 into 1 plus CD. You know what? S0 into 1 plus CD. CD means what? The deposit rate. S0 into 1 plus CD. This is the money in my hand after the 1 year. Yes or not? Minus what? AFP. Minus actual futures price. Minus actual futures price. ரொம்ப simply, I buy at what? Actual future price. Today sell at what? Spot price and even the deposit income. Yes or no? Now come to the second branch. Profit is equal to, second branch, profit is equal to, all of you, I sell at what? Actual future price. Sell at actual future price minus I buy at what? Spot price S0 into 1 plus CB. CB means what? The borrowing rate or borrowing cost. S0 into 1 plus CB. S0 into 1 plus CB. Now, everybody, are you following or not? Now, shall I proceed? Next, point number 1 or 2? Point number 3. Okay, point number 3. When the market is perfect, when the market is perfect, there is one fair futures price. When the market is perfect, there is one fair futures price. There is one fair futures price below which we can earn arbitrage profit, below which we can earn arbitrage profit, below which we can earn arbitrage profit through what? Short sell and buy futures, below which we can earn arbitrage profit through short sell and buy futures, below which we can earn arbitrage profit through short sell and buy futures, understanding writing or not, and above which also we can make arbitrage profit, and above which also we can make arbitrage profit, and above which also we can make arbitrage profit by what? Spot buy and future sell. By spot buy and future sell. By spot buy and future sell. Now, what I try to say is, there is one fair futures price, below it, it has an actual future price, what I will do? And make a profit by selling today, buying tomorrow. Above it means what? Buying today and selling tomorrow. Everybody, yes or no? Write down. Next. Point number 3 or 4? 4. But in reality, market has imperfections. But in reality, market has imperfections. But in reality, market has imperfections. Like A, different deposit and borrowing rates. Like A, different deposit and borrowing rates. Different deposit and borrowing rates. B, fill in the blanks. What is point B? Transaction cost. Point B, transaction cost like brokerage. Transaction cost like brokerage. C, fraction holding by the broker. Fraction holding by the broker in case of short sell. Fraction holding by the broker in case of short sell. In case of short sell. Everybody, are you understanding it or not? Now, next, point 4 or point 5? Point 5. In above case, the no arbitrage price, in quotes write this, the no arbitrage price, in above case, the no arbitrage price becomes, in above case, the no arbitrage price becomes what? No arbitrage boundary. The no arbitrage price becomes no arbitrage boundary. Full stop. Arbitrage exist. Arbitrage exists when the actual futures price, arbitrage exists when the actual future price is below and above minimum. Arbitrage exists when the actual futures price is below minimum and above maximum. When actual future price is below minimum and above maximum. Is below minimum and above maximum. Is below minimum and above maximum. Everybody understanding it or not? Now, next. Point number 6. Point number 6. No arbitrage boundary is calculated as follows. We'll write the formula and the answer together. Okay. No arbitrage boundary is calculated as follows. No arbitrage boundary is calculated as follows. No arbitrage boundary is calculated as follows. Minimum futures price, maximum futures price. Minimum futures price, maximum futures price. Minimum futures price, right? F into S0 into 1 minus T into 1 plus CD. F into S0 into 1 minus T into 1 plus CD. Now, can I proceed? Now, maximum futures price, right? S0 into 1 plus T into, can you tell me what is T? Transaction cost, brokerage. S0 into 1 plus T into 1 plus CB. S0 into 1 plus T into 1 plus CB. 1 plus CB. Everybody understanding it or not? Now, come to left hand side, substitute the number in question number 24. What is a fraction amount is releasing? How much is releasing? 80%. It releases only 80% fraction of the short sale, 80% into what the spot price? 30,000. 80% into 30,000 into 1 minus 3%. 1 minus 3% 97%. Into 1 minus 3% into 1.06. Deposit rate is 6% not into 1.06. 24,677. 24,677. 24,677. 24,677. 24,677. Everybody understanding her? Now, next. Second branch. 30,000 into spot price 30,000 into what is 1 plus T? 1 plus 3%. What is 1 plus 3%? 1.03. Okay. 30,000 into 1 plus 3% into what? 1.10. What is the 0.10? Borrowing rate into 1.10. Is equal to 33,990. 33,990. Next line. If the actual futures price is below, continue same point. If the actual future price is below 24,677, if the actual futures price is below 24,677 and above 33,990, if the actual futures price is below 24,677 and above 33,990, tell me what happens? Arbitrage exists. Arbitrage exists. Arbitrage exists. Everybody understanding now? Next point, 6 or 7? Number point number 7. Point number 7. Understanding minimum futures price. Understanding minimum futures price. Understanding minimum futures price. Understanding minimum futures price. Underline that. Below that, right? We short sell at, let's write with numbers. We short sell at how much rupees? 30,000. We short sell at 30,000. But the amount due is only 30,000 into 97%. But the amount due is only 30,000 into 97%. Tell me why it is only due. Broker takes what? Brokerage. Bracket right? Broker takes brokerage. In bracket right? The broker takes brokerage. The broker takes brokerage. Bracket close. Full stop. Of the amount due, he will release only. Of the amount due, he will release only how much rupees? 80%. Of the amount due, he will release only 80%. Of the amount due, he will release only 80%. Enna purinjada? Full stop. Hence, the amount deposited is, how much we deposit? 80% into the amount deposited is 80% into 30,000 into 97%. The amount deposited is 80% into 30,000 into 97%, which along with interest grows to, which along with interest grows to, which along with interest grows to, tell me it along with interest grows to what? 80% into, don't get annoyed, write it, 80% into 30,000 into, grows to 80% into 30,000 into 97% into 1.06. 97% into 1.06 is equal to how much rupees? 24,667. 24,677. 24,677, which is the maximum futures price I will pay. Which is the minimum future price. Wrong here. Wait. Or which is the futures price I will pay. Which is a future price I will pay to earn zero profit. Which is the future price I will pay to earn zero profit. Which is the future price I pay to earn zero profit. If the actual future price is less, we make profit. If the actual futures price is less, we make profit. If the actual future price is less, we make profit. If the actual futures price is less, we make profit. Everybody, are you understanding it or not? Now, last point. Point number 7 or 8 or 8. Understanding maximum futures price. Understanding maximum futures price. Understanding maximum futures price. Write down. We pay, how much we pay? 30,000. We pay 30,000 into 1 plus 3%. We pay 30,000 into 1 plus 3% to purchase. We pay 30,000 into 1 plus 3% to purchase the gold along with brokerage. We pay 30,000 into 1 plus 3% to purchase gold along with what? Brokerage. By borrowing at how much percent? 10%. By borrowing at 10%. Which matures to how much rupees? 33,990. Which matures to 33,990. Which matures to 33,990. If I sell at this actual futures price, if I sell at this actual futures price, I make how much profit? Zero profit. I make zero profit. If the actual futures price is more, what happens here? Arbitrage exists. If actual futures price is more, arbitrage profit exists. If actual futures price is more, arbitrage profit exists. Respond, are you following or not? Last point. Point number 7 or 8 or 9? Point number 9. For institutional investors, and investors having huge volumes, for institutional investors and investors having huge volumes, the transaction cost, the interest rates, and fraction money, the transaction cost, interest rates and fraction money may be more favorable. The transaction cost, interest rates and fraction money may be more favorable. Hence, their no arbitrage boundary will be. Hence, their no arbitrage boundary will be. Hence, their no arbitrage boundary will be what? Narrower. Hence, their no arbitrage boundary will be narrower. Their no arbitrage boundary will be narrower. It won't be 24 to 33, maybe what? 27 to 31, etc. Their no arbitrage boundary will be narrower. Due to which, what is no arbitrage for others? Due to which, what is no arbitrage for others will give arbitrage scope for them. What is no arbitrage for others will give the arbitrage scope for them. Will give arbitrage scope for them. Respond. Are you fine now? For example, they are 27 to 31. 25 is what? No arbitrage for me. It will give them what? Arbitrage scope for them. Such an arbitrage is called what? Quasi-arbitrage. Such an arbitrage is called quasi-arbitrage. Such an arbitrage is called quasi-arbitrage. Everybody, are you understanding it or not? Now, with this, we completed the concept of fair futures pricing and then what? Arbitrage, along with the single arbitrage and no arbitrage boundary. The last leg is pending as what? Hedging through futures. Okay, hedging through futures. Now, okay, give the heading, hedging through futures. Stop talking.